Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi there, I'm Justin Waite. I'm a small cap investor, potentially big reward, but big risk. If you're new to investing, don't start with small cap stocks. Start with funds. I've recently done a video on that, and you can see my strategy basically for small cap stocks up there. But small caps are very risky, but potentially big reward. Now, this video is about charts. I'm going to cover quite a few charts, or look at the charts of companies I own. But before I get into that, I just want to talk about the markets at the moment, because the markets are very hard, very unforgiving. And for a long time, they've been like this, you know. I'm 69% in cash, my portfolio. No one stock takes up more than 5% of my portfolio. We are at the end of a bull run, end of a cycle. Liquidity is low, risk is off. Now, there's two types of stocks, basically, growth and value, okay? When you're at the start of a bull run, mid-cycle, even towards the three-quarter point, growth is good. Growth stocks, yeah, highly leveraged to global growth. When you're coming towards the end of a cycle, get into value stocks, all right? And I don't mean big old stocks or companies, but I mean you can find small caps that are starting to generate cash, generate revenues, will not have to go back to the market. Because growth stocks that are pre-revenue, okay, will start to struggle if they have to go to the market to raise money. People do not want to loan money in these kind of markets. So they'll be basically having to issue equity at bigger discounts for little or below the amount they wanted to raise. They have to raise more. So if you're looking at companies, honestly, go for companies that have enough revenue or enough cash to take you through 6-12 months, because it's going to be a hard 6-12 months. And that's why last September I switched from oil and gas and resource stocks that are pre-revenue to basically, tech companies that are generating revenue and heading toward profitability. But if you're an investor, not a trader or a punter, all right, an investor, then you should always look to try and massage the odds in your favor. That's the difference, I believe, between gambling, punting, and investing. Okay, here's 5 avoidable risks. I'll repeat them again. I've done videos on this. I'll do it again. But 5 avoidable risks to help you sway the odds in your favor. Number 1, avoid pre-guessing results when they're significant to the share price. If you don't know the results, you're jumping in beforehand, it's a punt. If you're already in on the stock, and you top up more before results, and the results come out, the share price goes down, you're further down. If they do well, you haven't missed out, because you've already got shares in there. It goes up, you just top up, But avoid pre-guessing significant results. Number 2, avoid companies operating in questionable jurisdictions, okay? They may not all be corrupt, but you find it takes a long time to get things done in places like Africa, China, and there's all different places, all right? So you don't have to pick companies, based there at all. 3, avoid companies that need cash, essential. If they're going to need cash in the next, 3, 6, even almost 12 months, they may struggle, all right? Avoid companies that have high levels of debt. Thomas Cook, you don't have to go for companies like that. There are people now taking punts on companies that have debt and need to raise money. You don't have to pick those kind of companies. And avoid companies whose share price have spiked in the last few sessions or recently, or risen fast recently, okay? Stop trying to catch falling knives. I see people doing this all the time. Some of the most followed companies of late have been like Metro Bank, Thomas Cook, there were the Debenhams before that, Carillion before that. If you're an investor, invest in a good company. What's wrong with that? Why are you picking rubbish companies? There's plenty of companies out there. It's hard enough to pick good companies. Don't try and pick companies that are distressed. They're being sold off heavily, and you're hoping for a quick turnaround, for a quick buck. If you're looking to earn a quick buck, you're probably going to lose a quick buck. Try and find a company, a business. You're investing in a business that will do well over the mid to long term. And you will get almost a safe return on your money, a multiple return. It's actually a small cap, all right? That's the kind of stocks I'm looking at. Hope that makes sense. Any comments below, please put them below. Don't forget, if you like this video, then please hit that subscribe button and the notification bell. Okay, let's get into the charts. Okay, I was wrong on Bitcoin, okay? I did say it's going higher. I do mean mid to long term, no sort of, but I was hoping it would go higher short term. As you see this wedge there, it's conformed. Look at that, it's conformed the pattern there. There is something in technical analysis. Look at this. So I drew this line here on the chart, and I said hopefully, it's a continuity pattern. Obviously, hopefully it'll break up, but it hasn't. We had a big sell-off last night, and it's gone down like 20% in the last 6 sessions. Lost $2,000 per Bitcoin in the last. So look, as soon as it broke this line, because it's tested it, look, there, that's 1, 2, 3, 4 times. 5th time just broke down below and really dropped. So once it broke through there, it was almost like, breaking that floor, holding the floor. It's like someone in the attic, walking around and then not realizing the attic door is open and really walking along the attic door here. The door's open. Whoa! Falls down. But it's hit support pretty much at a 200-day moving average. We'll see if it holds. I only care about Bitcoin because I own Argo Mining, blockchain mining. And it won't affect them. They are a low-cost miner. It's like, proper, this is digital gold. It's like proper gold mining. You go below a certain level, price level, and it's not profitable for other miners. They can mine this profitably, at like $2,000. I mean, obviously they won't be making any money there, but so there's still margin in it for them, plenty of margin. Let's just have a look at gold. I've topped up on gold recently. I've topped up on gold pretty much because I see it as global growth slowing down. I'm quite bearish on the market here. It's very strong. Look at this. So we came back here. I have been buying around this level. The MACD look is converging. The RSI is now went down to 46. Even though it did that, look, it didn't really move that much. So the strength came down. The price didn't move that much. That means there's strong momentum there. Gold, of course, central banks, printing money, devaluing their currencies. Gold is a safe haven asset. It's a good place to put your money. Okay, let's look at. Of course, this is inextricably linked to the price of Bitcoin. It's the blockchain miner. So look at this, trend levels, trend lines. It's right on that level here. Now, I want to top up in this company. I will not be topping up until the MACD has come round and the RSI is put. So like this here, like we saw here, look, it'll take a while. So how long will it take? It may, they're going to do an August update, of course, and that'll be a quarter update. So we'll have a bit of transparency, a bit of clarity about the numbers. So I will not be topping up until we see a decent update like this, which will turn these MACDs around and the RSI around, hopefully. No point trying to pre-guess a bottom. If you do that, it may go lower. Make sure momentum's on your side. Like I said on the weekend podcast, it's going to a beach and waiting for the tide. Tide to come in to surf it. You may go to a beach when the tide is going out and say, this is a cracking beach to surf. Go in there, the tide's going out. No waves. You have to wait for the waves, and you have to wait for that momentum to pick back up. That's why you have to, the MACD come round. Patience. So it may even consolidate around here and go sideways for a while, but you need that sort of, where we are right here, look at that, the blue there, the blue there. So it may have a bit more further to go, who knows. But when that picks up, I'll be picking up some. So let's have a look here. By the way, I've sold that. Like I said, do you know what? The interim's going to come out. I'm not going to wait. I did say I'll wait until the end of the quarter. I'm not, because the interim's come out. They have no revenue yet. I like the tech, but until they start earning a bit more revenue, until they start heading on, they still need to raise a lot of money, They still need to get things going. They're still ready to start their journey. They've been doing this for ages. I like the tech. It's gasification, from plastics to, to energy, but it's still not going anywhere. So, okay, Agronomics, let's look at these. So, not much going on. It's hitting support here. I'm questioning Agronomics, really. It's an investment company. I love the sector they're in, the clean food sector, but, how much exposure can you get to these companies? Like, for example, let's say they put £1 million, okay, in a company, okay, and that company 10 bags. That £1 million worth 10 million to them. That means they will double. It's unlikely a company, they put their £1 million into a 10 bag, and you know what? They put nowhere near £1 million into any company. So it's hard. You haven't got the exposure. That's the problem with investment companies, It doesn't matter how well their investments do. You are twice removed from exposure of that company. So I'm starting to question my exposure here. I've brought my exposure down. I like the sector. I just don't like the vehicle. You know, there we are. Okay, what's next? Bidstack's had a bit of a sell-off of late, but do you know what? It looks a bit like the Bitcoin price, but look, it's holding support here pretty much. Look at that, it's coming up the support here. You know, I quite like this. It's coming round here. We've got an update next week, of course. We've got the interims. I just genuinely think once the interims are out the way, it's good to go. I really do. We're sort of pricing in the interims a little bit here. It's fallen a lot. And I don't think it'll disappoint that much on the downside. I think it'll be priced in. Hopefully they'll do an excellent, post-period update, and we'll have some news out beforehand. So I think we're good for a rally here if the interims don't disappoint too much. People pretty much know revenue is back-end loaded, I think. If you don't, then you have not done research. But I'm hoping, after interims we'll rally. That's what I'm hoping. And we'll break up through this channel. But yeah, but it's holding support quite nicely. And like I said, we are, strength is down. It's oversold. It's really low. It hasn't been this low since back here, January time. Okay, Immotion, of course. Do you know what I liked about the release? I'll cover news, of course, on the weekend. Sort of video. Look at that bow. I really like that bow. RSI as well climbing. I mean, pretty much we are at this level. And they did say, essentially, going to become break-even in Q1 next year. I like to see that. They've got cash, don't need to raise any more cash, and from there, I think profitability. And that's what I'm talking about with companies, investing in companies right now. You've got to make sure companies you invest in don't need to raise any money. Itaconix, anything there happening? So look, again, I've covered this. At the moment, I don't think they offer good value for money. We are, 6 million? We are 4 times. If they do double the revenue in H2 they did in H1, we are still 4 times revenue. That's highly valued. It really is. If you look around, there are not many companies valued at 4 times revenue and loss-making as well. So it's flatlined. If it comes down here, so 1.5, something like that. I don't know. If it comes around 3 million market cap, 4 million, 3.5 million, 4 million, I'm a buyer. I'll still hold it there for a while because it's a developing company's doing well. Nuformix, again, had a bit of a nightmare. We need the Chinese to pay up. Come on, Chinese, pay up. Give us your milestone payment. Again, it's holding support quite nicely here. Look at that. It's tested this level a few times. We're on the 6 point level. It's trying to get above there. On the RSI, can't get above that sort of 55 area. Look, when it does, go to town. So we just really need news. Good news on the Chinese front, and we're laughing here. Orphan at all-time lows. I mean, do you know what? Have a listen to Cahill, the interview I did with him on the podcast on Wednesday. When these companies at the lows, worth topping up. I topped up today. I just genuinely believe is an acquisition coming, and it's like I said, it's not issuing lots of stock to get the acquisition going. He said he explained it's going to be sort of 1 times revenue, and hopefully it'll generate 2-3 times revenue in value. So he's looking to get this company going, and I do believe him. He's put the most amount of money ever in this company, and he's been around the block and done it quite a few times. Polarean, good news out about Amphion, the seller. The biggest holder they have, who was selling stock, of course, to pay back their loan because they're skint and their loan expires at the end of this month. Have had their loan extended, which means they don't need to sell the stock. So there we go. So some volume coming in here. So don't need to sell the stock. So hopefully we'll see a little bit of a rise here in Polarean as we head towards some news towards the end of this month, full enrollment, and then news on their phase 3, which will be a few weeks after that, hopefully. 4 to 6 weeks. They say before the end of the year, so who knows. Let's have a look at the skin. It's quite a messy old chart in Integumen. But it's holding well. But thing is, it's had a strong rise. From this level, look at this. It's done a 5 bag here, pretty much. So it needs to, the steam has to come off it a little bit. But we're looking at support on this level. Look, 1.5, 1.5.5. It doesn't hold that to go lower, but hopefully we get some nice news out. I like the moving averages coming around here. Look at that. That's cracking. All the moving averages in the right direction. Well, in fact, they're rolling over a bit, so that's not too encouraging. But this level here looking very nice. Now the 50 and the 20 is rolling over a little bit, which is not nice. It's downward pressure here. So it needs to hold these levels. Otherwise, it'll probably go lower. What else we got? Safestay. Do you know what? Cracking results from Safestay. I'll cover those in the weekend podcast. But look at this. Literally, 27 million is net asset value. They've valued 21 million. They're now generating cash. They have 8 million of cash, you know. It's popped up a bit, some good volume, but I think the seller, Mighton is the seller. They're in here. And I think 26th of June, they were about 4.96% of stock. I assume they've sold into this. Or whether they're holding 5%, I don't know what they're doing. I know Mighton is reducing everywhere. So I don't know what they're doing. But we needed to get, you know, it'll grow. It's a company here worth holding. And it'll be a genuine, a multiple returner of value. It'll return your stake multiple times in the next 3 to 5 years as an investor. And that's what we want to do, you know. That's what we do. Wey Education. Is it moving? I like this. Again, it's flat, but I like this above the 200 moving average moving up. Or we need some decent news on Wey, and it'll move forward. It needs to break this level here. A previous high, if it breaks that 12.8, we're having a laugh. And there's nothing really happening with Xeros, I don't think. Of course, they are paralysed by the fact that they've announced to the market they're going to raise some money. But I'm encouraged. You know, I love the tech of this company. Going forward, I think it's very good. They have revenue, unlike Powerhouse Energy, which I've dumped. They have revenue, of course. It's still big loss making, but I think their tech is worth millions. I genuinely do, and that's why I'm holding on to it. Having said that, it'd be even better if Mark got some skin in the game. Have I mentioned that before? I'm going to try and do this weekly now, a chart video, okay? I will do one or two requests. If you want to request a company that I don't mention or don't own, then by all means, chuck it below in the comments, the ticker, the name of the company, and I'll look at the chart, okay? There was a few I need to look at. I know I didn't catch up on last time, but I did some educational videos in between. Don't forget, hit that subscribe button, click on my face there, and the notification bell. It's very important, and there's also some videos there you can watch too. Thanks very much.